Welcome to another episode of Anyone Have a Pencil. Today, my guest is Jeb Smith. Jeb is an amazing real estate agent out of Orange County, Huntington Beach area. He's also the host of the Educated Buyer podcast. And today we're going to discuss, a lot about the current state of the market, how things have changed in the industry, and how you can protect yourself as a home buyer and investor. One thing I really admire about Jeb and loved listening to his story and just kind of hearing from him on the people first approach that he takes with his clients. He's an educator first and really driven by the results for his individual client and taking them on an individual basis, making sure that they're accomplishing the goals that they set out to in the transaction and, putting profit and sales techniques in the background and really just being a people person and an overall good guy. I think you guys will really enjoy this podcast and hopefully you learn a little bit along the way. Jeb, welcome.
I appreciate you having me, man. Glad to be here.
Yeah, thanks for taking the time. I got to be completely honest with you. Part of the reason I reached out to you for an interview here is because I saw a lot of your content. And I love what you're doing. I like the educational aspect of it. I like that you're not just trying to beat people over the head by selling them real estate or get a listing. And there's a couple videos that caught my eye, so I want to jump into that. But before we do, I'd love for you to kind of give us a little bit of background on yourself. What brought you into real estate, what you're currently doing now, and how you're positioning some of your clients.
Yeah, so I've been in real estate 20 years, kind of got thrown into it. I'm from the South, from North Carolina, born and raised, and came to California in '02. Family, friends, or friends of people I knew were in the mortgage and real estate business. I was looking for a job. I was a computer science major, knew I didn't want to do anything with computer science, and kind of got thrown into real estate. And I'm a pretty quick learner. Numbers make sense to me. And so, I started on the mortgage side of things, kind of grew pretty quickly on that side, got most of my business from real estate agents and realized that the real estate agents, in my eyes, had it a little bit easier than me on the mortgage side. I was kind of the fall guy for everyone. I was the scapegoat for all problems when there was a real estate deal, and made it through the craziness of '08 and '09 and came out on the other side of it and simultaneously doing real estate, while doing mortgages, and then just kind of realized that I didn't enjoy the mortgage side anymore. There was just a lack of education in with people coming into the process, and there's not enough time to teach them what they need to know in there, in that short window, and do their loan and do 10, 20 other loans at the same time. And so kind of got me out of that business into real estate and started selling real estate. And, because I knew what it took to deal with real estate agents and, because of how I got my business initially. And I'm a relational person by nature when it comes to business. And so my business was built on relational principles and, past clients, friends, and family. And long story short, real estate has kind of been the bread and butter that's allowed me to do some of the other things that I've been doing, which you kind of mentioned earlier, which was, becoming an educator on YouTube and becoming, the host of a podcast called The Educated Homebuyer, where essentially, the two kind of operate simultaneously to some degree. But my channel on YouTube is really about all facets of real estate education, whether it's mortgage, whether it's, buying and selling real estate. And that all came about during the pandemic. For a short period there, I wasn't sure what I was going to do. All my eggs were kind of in one basket. I wasn't diversified in how my income came in, and realized really quickly, like, shit, I've got to do something. I can't just, wait for the government to decide whether or not I can sell real estate. So I started talking about it online. Some of the stuff took off, and long story short, it's been kind of this, passion project, if you will, for the last 4 years. And, here we are, man.
Awesome. I love that. Where are you from in North Carolina?
Small town, Kinston, about an hour east of Raleigh. So country, middle of nowhere.
So I was born in Charlotte, and I lived in like Hendersonville area for a while, up by, Asheville.
Yep.
Then went to East Chapel Hill High School, and then ended up out here in Texas. So it's kind of a small world. Crazy.
Yeah. Funny enough, I just referred a buyer to Hendersonville, who just closed a couple days ago. And I went to East Carolina University. So in North Carolina, and then graduated around
Pirates.
here. Yeah, the Pirates.
That's awesome. It seems to me, and like through talking with a lot of real estate agents, and full disclosure, my view of real estate agents is kind of like the same view I have of attorneys. 99% of them are way overcharging you for underperformance. But when you can find the 1% that are worth what they're getting paid, it's a game changer. And I would recommend anybody, work with someone of a high value professional service in that side of things, especially, someone like yourself that has a little bit more of a background on the financial side. It surprises me how often I meet real estate agents that have such a lack of understanding and knowledge on the finance side, what products are available to them, how to structure the right product or refer them to the right lender. How is that giving you an advantage or a leg up against other real estate agents?
I don't think that I use it enough, if I'm being completely honest. I mean, you said something important there. And I think, I think of real estate agents the same way that you do. And I'm in the business. I mean, the barrier to entry is so low, and there's nothing that happens after you get your license other than 4 years of education, at least here in California, and most of that doesn't even apply to the day-to-day of real estate, which most people don't understand. So, the only way you get experience in real estate is actually doing real estate, by selling real estate, by helping buyers, sellers over time. And so I think, that's when somebody's out there looking, you don't need the person that's, ancient to sell you a piece of real estate, but you need somebody that has some experience, whether they've been working on a team or individual or what have you, just to be able to provide some of that value. But the finance side is one of those things that I think more so it's helped me from the listing agent side more so than the buyer's agent side. And what I mean by that is when people submit offers to me and they give me their buyer's financials or credentials, I'm able to kind of read through that stuff. I am able to read through that stuff and get a pretty good idea of who that buyer is without having to call the lender on the other side. Now, I do call the lender on the other side the majority of the time, and I know the questions to ask, right? I have a good feeling of the direction that it could go based on certain things. And so, they're always trying to educate me in that process. But fortunately, I have the background to kind of know, what I should know in that process. So from that side, it's good. But it doesn't mean problems that don't happen, right? I mean, but it does give me a leg up when helping sellers decide which offer is better than others, and also not being scared of FHA, not being scared of VA, not being scared of some of these programs that have a bad rap because they're, minimal down payment or no down payment, because there's a lot of people out there that push people away from these products. And the reality is they shouldn't be, because they don't know how they work. And so I think that's where the real advantage comes in.
I agree. And I think that's a big part of like trusting the professional that you refer them to as well. I mean, there's caps on FHA for what you can charge as a loan officer and VA. If you're not, directly funding to them. So, a lot of loan officers like to sell away from those products just so they can beat their client over the head with an origination fee. We found that out early on, which is why we started a mortgage company for our clients, just to make sure that, they're getting consistent fees, and they're getting really, in-time feedback on products that are available that can help them out in their situation, instead of trying to, force feed them into one bucket or the other.
No, like any industry, man, it's 80-20, but it's like 80-20 of the 80-20, right? It's a small majority of people out there, 4 to 5%, in my opinion, real estate and mortgage. The top 4 to 5% are the people that you should be probably talking to, right? I mean, there's a lot of call centers, a lot of Google, a lot of, people that pop up when you put certain things in the internet, the interwebs, if you will. And I would say more often than not, that's probably not the best choice.
It's in the computer.
Yeah, exactly.
So one of the videos that really got my attention, that I built an entire business off of, actually, was the using your retirement funds to purchase property. I think you just released a video on that, borrowing against your 401k.
Yeah.
And, obviously it's a short clip, but you can borrow against, your retirement account, your self-directed account, all of that stuff. So how are you explaining that to clients? And what's the benefit of doing that? I just kind of want to summarize that video really quickly.
Yeah, I think most people think that they need to wait until they save X amount of money to buy a house, whether it's 20% down so they can avoid mortgage insurance, or whether it's X amount so that, payments in line or whatever, but rarely do they ever think about the money that they've already saved. And more often than not, somebody has a job that they were at, they have a 401k, they have some cases an IRA where, you can buy in your IRA. We're not going to get into all of that, I don't think, but, you can own the property. Your IRA can own the actual property. But when it comes to a 401k, you can borrow against it, right? And people are like, well, I'm going to get taxed. I'm going to get taxed on that. No, there's different ways to do it. One is obviously you can withdraw the money, which is not the right way, because you're going to get taxed on that money. Even I guess if you're at retirement age, then there's the hit is less. But loaning, you're basically doing a loan against the 401k where you're essentially borrowing money from yourself, and then every single month you repay that money. You're paying interest on that money that you borrowed, but you're repaying it to yourself. So the reality is, people, I have comments all over the internet when I post videos like this, like, well, yeah, but you're killing yourself on compound interest. You're doing all of these other things. And it's like, potentially you could be right in the right circumstance, but you're also getting into a home that you're paying the principal down on the mortgage. You're putting that money into forced savings, if you will. You're gaining the ability, the appreciation of that property. In some cases, you're getting tax benefits. There's so many other things that people are so short-sighted on when talking about these products that they don't actually explore the opportunity out there. And I think, I've had clients that have purchase property using investment accounts, and been able to, minimal down payments, 3.5%, 5% loans bought with an FHA. Fortunately, at the right time in the market, homes appreciated. They've been able to refinance out of that product into a conventional loan, avoid mortgage insurance. There's so many different things that can be done. And I think it's just having somebody that you can talk to that understands that, where you don't feel like you're being sold to, right? You don't feel like, Jeb's trying to get me to do something that's not right.
Yep, I agree. And I think that if you look at the arbitrage between, borrowing the money from your 401k to buy the property, right? You're still contributing to the 401k. Most of the times you're getting it matched by your employer. Yep. So that's, relatively free money, right? They're the employee match. And you're paying yourself back over time. So it's not something that's a lump sum that you have to rush to put back in there. And if you look at the arbitrage of, the amount of interest that you save on putting additional money down or whatever it is by borrowing from your 401k, I think that more than enough would probably offset the compound interest argument that the comment section would argue
that. And it's like, how quickly can people save money, right? Like, so during the pandemic, like in early pandemic, 2020, 2021, the idea was, I was telling people you should buy a house now. Why? Because you can't save at the rate that homes are appreciating. Right. Yep. Because it was crazy. Low supply, buyer demand was crazy. Interest rates were all-time lows. There was nowhere for prices to go but up at that time. Now, the market's obviously changed a lot. There's markets that have inventory back to 2019 levels. Things have slowed down. And, it's not necessarily hey, you got to buy today. Otherwise, you're going to miss out on this opportunity. But what I will say is most people can't save 20% down quickly enough to offset the appreciation and the other things that they would have gained had they just bought the property. And, obviously, assuming they're not putting themselves in some sort of financial, distress situation.
And we're talking about a primary residence here too. You touched on something earlier on, buying property inside of your retirement account. I think that's one of the best kept secrets in real estate, where you can self-direct your retirement. If you're self-employed, you can have a self-directed 401k account or a SEP, and buy real estate inside of your retirement. And you can get a loan inside of it, which is non-recourse. I think that's insane. If you look at, if you put $100,000 down on a $300,000 property, it's used, you're purchasing it using either pre-tax or post-tax dollars. There's no capital gain for an investor. That's a phenomenal tool.
No, absolutely.
So, definitely look at exploring that. You mentioned a little bit inventory levels. Obviously, from a macroeconomic view in the real estate market, inventory is up a little bit. Prices have kind of slowed down as far as inflation and, the cost of a home. But if you look at a local market, you got to take it for its individual assets, right? So,
Absolutely.
I'm in Texas. We do stuff in Missouri. We've done stuff in Oklahoma City, North Carolina, all that stuff. Talk to me specifically about Orange County, because that's where you're primarily focused, right?
Yep.
One thing in Texas that we have as an advantage is that there's still a lot of available land.
Mm-hmm.
So when I buy dirt, I can build it relatively inexpensively. I can still build rooftops for a good price. But where you're at, I would assume that, land is a commodity, right? Being able
Absolutely.
to actually acquire that. So how are you positioning people in Orange County, and what's going on there in your local market?
Yeah, I think that's important, right? Is people get caught up in the headlines, right, without understanding the context. And most of the headlines are nationwide headlines. So when you hear a nationwide headlines, most people take that headline and apply it to their market without actually knowing the local data. Something you said there is you're in Texas. I saw a stat. Maybe it was last year. I don't remember the number, if it was this year or last year, but Dallas, the Dallas, Texas has built more houses last year than the entire state of California.
Yeah.
Right. Why? One, land. Two, cost to build, right? In order to break ground on a house in California, construction, it's about $100,000. But all the regulatory fees, all the crap that you have to do, environmental, all this stuff, it's just crazy. So it's very expensive, for one, to build a house in the state of California for those reasons. Secondly, land. There's a lack of it. So where I am in Orange County, I'm in Huntington Beach, so a little, coastal. Most of the communities that are being built at this point are infill developments, right? They're either tear downs of an old school. They're either, an old Huntington Beach is an oil town. Most people don't know that.
Yeah.
And so a lot of oil here, and there's a lot of old dirt that it's either contaminated or it just has been built on for one reason or another. And so now a lot of that stuff is being turned over. Now, the issue for most people is that that's not, that housing isn't quote unquote affordable housing. Most of these homes being built are 2 million, $1.5 million, 2 million, $3 million. So when you look at it from that standpoint, you got to help people understand the context, right? Yes, there are homes being built. Yes, inventory is picking up, but compare it to what we have in our market. And I think the advantage and the disadvantage to Orange County is that there's a lot of money here, right? A lot of money, a wealthy county in general. So we're kind of in this bubble, if you will, not a real estate bubble, not a crash bubble, but a bubble in the sense that we're somewhat insulated from some of the things you see and hear in other markets, because, you go out to dinner and on a Tuesday and it's, an hour and a half wait. And, it's like that everywhere. And you're like, I thought we were in a recession. I thought things were slowing down. No, not in Orange County. I mean, it's crazy. So it's from that perspective, things are still moving along. The thing, again, about Orange County, it's coastal. Not all of it, but a lot of the cities you've heard of are coastal. And so people want to be in an area with good jobs that are centrally located. We're close to San Diego. We're close to LA. So we have a lot of things going for us. And the reality is we have a lack of options, of opportunity for people to come out here and build a massive supply of homes. So it always goes back to the fundamentals when talking about really anything, but specifically real estate, in the sense that as long as you have more supply or more demand than you have supply, the number of homes available to people, prices aren't going to fall. They're not going to drop. And I think helping people understand that, yes, prices are high, affordability is low. These are all issues, but the reality of prices dropping, relative to other things dropping and helping affordability, like rates, we got to all put it in perspective. So the longer you wait, I tell this to people all the time. I've got a client from 2019 that sold in 2019. I helped them buy in 2016. 2019, they thought the peak was here, top of the market. They sold. They still haven't bought back in. And they're waiting for this opportunity. And the reality is that opportunity that they're waiting for is never going to come. Yep. And if it comes, it's not going to be anything like they think it is. So I think it's important to understand, find somebody in your market that's good. Find somebody in your market that understands basic data, can show it to you, doesn't make up data, shows you real data and why things are doing what they're doing.
Yep. I agree. And it's interesting when you contrast, that bubble to other parts of the country. We experienced that here too. In Texas, you could literally throw a dart anywhere on the map and you have a city that's experiencing, net population growth, higher income, new schools are being built. And that's a byproduct of COVID too, right? I mean, there was a mass exodus from some states to other states, and Texas happens to be a prime beneficiary of that population migration. So you just the difference is that here, like you were saying, a lot of builders built a lot of inventory, right? Mm-hmm. Then the market kind of stalls out and you have a buyer's market. Now all of these builders are having trouble, maintaining their cash flow because they're not selling property at the same rip that they were 2 years ago, even 3 years ago. So you have a really interesting opportunity to snag those properties, but I think those incentives are going to start going away. Interest rates come down, population continues to increase. So you're going to have less and less available inventory. In your neck of the woods, you have that inverse, right? So you have a real lack of supply, right. And that demand's not going away. So if I'm an investor in the Orange County area, what am I looking for? How can you make money? Is there cash flow to be had? Is it multifamily? Like what do you look for in that market with the investors that you deal with?
It's tough. There are definitely investors out here. I think the largest majority of investors at the moment are people looking for fix and flip, people looking for short rehabs, looking to turn something quickly because of demand, right? Demand is still there, still a lack of supply, especially a lack of supply on a nicely remodeled home. Now there's a lot of flips out there that are garbage and, shouldn't even be on the market to start with. But the people that do it right, price it right, they're still making, pretty good cap rates on their money when turning these things. So I think that's the best opportunity. The problem is they're hard to find because there's so much competition. You got to have cash unless you have a shoe in with, the seller in some regard and being able to make these things happen. And some of these guys honestly are paying more money for properties than I think they're worth. I just sold a property that we had originally priced it at $1 million. The complete flip needs everything. And within 60, 90 days, they came back to us and offered us 1.1. I thought at $1 million, it was a tough deal to make it happen because it's probably $150,000 rehab. Mm-hmm. And on the upside of that property at that time was probably $1,250,000-ish, give or take. So the way this guy's planning out, he's thinking it's at least $1,400,000, $1,450,000. Is he going to be right? Possibly. I mean, that's the bet that you have to be willing to take with some of this stuff. And it's one of those things that, there is a lack of inventory, but at some point you kind of have to just, play safe to some degree. And some of these guys are getting a little reckless with it. So it'll be interesting to see what it looks like in a couple of years if people continue to buy some of these properties, because some of them are starting to sit now on the market a little bit longer than they probably initially intended because, rates haven't come down as quickly and they're pricing it high. But when it comes to multifamily, when it comes to just a buy and hold deal, it's tough. It's tough to make it cash flow because of prices, right? So, I typically think of investing in real estate two ways. One, you have appreciation. The second, you have cash flow. It's very difficult in most markets to put minimal down in cash flow and get the appreciation, right? So a lot of the markets that see cash flow opportunities aren't markets that see 10% appreciation, 5% appreciation annually over time, right? Some of these markets have been the same prices for the last 20 years outside of what happened during the pandemic. So that part's kind of interesting, but there's still people buying. I mean, I have one guy, I just referred him to a client of mine or a buddy of mine in San Diego who's a real estate agent, and he bought 2 properties with me. One was kind of a fix and he decided to hold it. And then the other one was, a property where he put 20, 25% down. It didn't cash flow to start with, but that property's probably appreciated $100,000 in the last year and a half that he's owned it. And the rent is helping him out. So it's like, it's not this great opportunity where you're like, hey, I'm going to put 20% down and every single month I'm making, 500, 1,000, 2,000, whatever the number is. It's tough to do without 40, 50% down with some of these properties, but rents are high. So it's interesting.
I actually do that a lot too, just because, cash flow is great. Equity is also great, but there's also, tax strategy when you're talking about, lowering your taxable income, real estate's one of the best ways to do that, especially if you can qualify as a real estate professional and you can accelerate all the depreciation from that asset into 1 year. So, I mean, a lot of California investors that we work with do that. And a lot of high net worth people are doing that too. That's another great way to position yourself, kind of, especially in, Orange County, where the properties are, $1.2 million to $2 million, and that's on the lower end.
Yeah. I mean, that's entry level where I am, which is, it's crazy.
Yeah, that is crazy. So, we talked a little bit about the local market, right? Do you see any opportunities, headwinds on a macro scale, either through, what the Fed's going to be doing? There's an election coming up. Mm-hmm. I can give you my 2 cents on that, but just kind of want to pick your brain. I'm sure you're having those conversations every day, even from buyers or sellers. Like, some people are going to fall on one side of the aisle or the other.
Yep.
And it seems like people find an excuse to make an excuse, why a deal won't work because of an election coming up. But what do you see? How are you coaching them?
It's interesting. I'm one of those people that I try not to get into politics, right? I try to worry about what can actually impact Jeb on a day-to-day basis, right? And people are like, hey, that's, you're selfish in the way you think. And blah. The reality is I can't control what Gavin Newsom does. I can't control what anybody else does. Trump, Biden, Kamala, whoever, right? It's like, what are they going to do that's going to impact me? Taxes, one thing, but more so on a micro level. My day-to-day doesn't change a lot based on these people. It's, hey, Jeb's got to go out and live his life. He's got a wife and 3 kids and got to deal with all that good stuff. So, but there are people that allow the impact of what's going to happen 3-6 months from now, in their decision making. And what I have a couple buddies that are in the luxury real estate market. They sell $30+ million homes, right? I mean, all over the board. And having conversations with them, some of their clients are truly holding off on waiting to see what happens with the election because they're impacted at a much higher level than Jeb, small Jeb down here. These guys making big bucks. So tax implications, different things actually impact them more so than they do me. And these people are waiting to see who gets into office to make decisions. Does that affect my typical client? Probably not. Not for the majority of them. But I do think that we're headed for recession, right? I think we're probably in one now, be announced a little bit, a year from now. The economy's slowing, employment's getting worse, unemployment's going higher, inflation is moderating. So those things are in control. But I think just like the Fed was too slow to react on hiking rates, they're going to be too slow on lowering rates because they're always behind the curve. They're always looking at, they're not looking at forward-looking indicators. They're looking at indicators that happened 2 months ago. And so with that, I think the recession probably hits harder than we want it to, which means lower rates. That also can mean lower prices in some markets. So I think there's going to be an opportunity there, but rarely do you see kind of the two move simultaneously together? Do you see lower prices and lower rates? I think lower rates for me, and people don't agree with this, but I think lower rates for me means stabilization in the market more so than more appreciation. Because I think what's going to happen because of how much appreciation we've seen, there's got to be some sort of reversion to the mean, at least percentage wise, right? I mean, it's not necessarily going to come all the way back to the mean, but you can't have prices appreciate at 10, 15% annually forever. It can't happen. So at some point, you've got to have some sideways movement, maybe some pullbacks in prices in order to kind of regulate that. I don't necessarily think where I am, you're going to see a pullback in prices, but I think the 3 to 5% appreciation is probably going to be what's status quo going forward. It's going to keep rate with inflation. And so I think if you're somebody sitting on the sidelines waiting for this opportunity to pull back, I don't know that it's going to happen. And it's tough as a real estate agent to tell somebody, hey, I think you should buy now because this is going to happen. Right. Because what if you're not right? Right. I mean, it's one of those things that you got to make an educated guess and tell people why you're thinking the way you're thinking. And the reality is people, react differently to different things. I mean, Orange County, I don't know if you know, like California is a blue state, right? I mean, but Orange County is the reddest part of the blue state. Yeah,
it's like Newport, Laguna,
Huntington Beach. Huntington Beach is the reddest of it all. So people here are very Republican, but the reality is it makes very little difference in a state where it doesn't really matter. Nobody, it's going blue regardless. So, do those implications change? You already know the direction of where our state's going. Majority wise, right? There's a Democratic majority, and that's never a good thing. It wouldn't be a great thing if it was a Republican. You don't need a majority. You need some sort of bipartisanship.
You need balance.
You need balance.
Almost like when you have that, like you have a Republican governor and like a Democratic, state Senate. That's like a great balance.
Yeah, no, that's a good balance, right? You can't allow everybody to get everything, but you can't allow them to push everything the other way either. And so California is one of those things that, it's most people don't know, but we vote on, things every November or whatever. And they don't pass. Guess what happens 2 years later? They show back up on the ballot. It's amazing to me how it's like, we voted on this. Didn't we? Didn't you get the point? Like we didn't want, and now it shows back up, and it's just language is different. So
take two.
But exactly.
I think you said something really interesting there too, because I think that's a great approach to real estate in general, right? If you're running your numbers at, let's say 2 to 4% appreciation, and let's say we're conservative and we're at 3% historically, you want to own that property for X amount of years. Let's just use it 3%, right? Mm-hmm. You're putting yourself, by owning real estate now, and it is hard for a real estate agent to say that, because, on the other end of that coin, it's like, well, you just want me to buy because you're going to.
Absolutely.
It's like, okay, well, if you buy now, right, and interest rates are coming down, and even if interest rates don't come down, they stay the same. You own an appreciating asset that you put yourself in the way of that next black swan event, the next, COVID, that the Fed all of a sudden, gives away free money. And, when we were sitting around during COVID, I'm sure you can share a story about this, but, we were in Chicago, right? That's where my corporate headquarters was. I didn't know if we were going to be selling real estate or not during that time, right? Because everything happened so quickly. We're shutting down businesses. The global economy is coming to a halt, right? Next thing you know, it's the busiest time of my life. I mean, Absolutely. We went from selling, 300 properties a year to 450 in the matter of 9 months, and it stayed at that level. So you just never know exactly what's going to happen. But by owning those assets, like our clients that bought property during that time, even though the interest rate wasn't perfect, and you weren't seeing 20% appreciation in the market, you were seeing 3-4%. They made the 20, 25, 30% in that. Now, that's not what you should base your investment decision off of, or your acquisition of real estate, but you put yourself in the way of taking advantage of that rising tide. I think that's the most important thing that you could think of, like if you're owning real estate over a long period of time. It's all about time and distance, right?
No, for sure. And I mean, I will say the people that benefited the most during the pandemic were those that owned assets, stocks, real estate, all hard assets, right? I mean, it was things that's the wealthy got wealthier, right? Those that were, it's who got screwed in that deal, the people that didn't own anything, right? But is that going to be like that forever? Hard to say. But I mean, history has, looking back at history, homes appreciate about 4.6% per year annually over the last 65 years. California's like 7%. Yeah. So every single year, I mean, there was a recent stat here in the Orange County Register, which is, our local newspaper here. And it was, I think last year was 10.6% or something. Right. Wow. And so it didn't feel like 10.6%, but I mean, because of how crazy it was the year before, it's because things have slowed down so much, it doesn't feel as crazy in the numbers, because it's not happening every single month. It's, for a while there, we were seeing 4 to 5% a month in some of these deals. I mean, in order to price out what a buyer should pay, you had to go back and look when that property was listed. When did it close? Back out the close date and say, okay, between this time and this time, this is how much more they offered, and factor that in going forward. It was, that is not normal for how fast things were moving. And so, but I think those times have slowed down. We will see.
Yeah, I have a proposal for the Fed too, by the way, because
Let's hear it.
like you were saying earlier, the information that they make decisions off of is months old, right?
Yeah.
But you have current data that you can pull from, Redfin, Zillow, ADP for jobs and payrolls numbers. Like all of that stuff is current now. I don't understand why we're still living in like the Flintstones version of fiscal policy, which is kind of crazy to me. I think that the interest rate, the Fed funds rate, should be a floating daily rate that basically is an exchange, just like bonds, and that you tie it to that, and that's the rate. I don't think a third-party body should be making adjustments to the interest rate. Let the market decide what it is, and let the actual current data determine if it needs to be increased or lowered.
Depending on who gets in office, you might have some sort of version of some sort of deregulation there. It's one of the topics that's being discussed, right?
Yep, that would be interesting. That was my idea 5 years ago, but I'll let the presidential candidates borrow it.
Yeah, I don't know what the actual plan is, but I know taking that responsibility away from them is part of the agenda. So
yeah. So you mentioned the interest rates, potentially lowering. I think J.P. Morgan is estimating that in September they're going to probably cut 0.5%. We'll see what the jobs numbers come out on Friday, but I think the minimum expectation is 0.25%. Maybe another cut in December. And then they're estimating that they're going to cut rates throughout 2025, right? Yep. My version of that, I'm absolutely in agreement with you. I actually think this administration and the Fed, for all the flack that they've taken, I think a soft landing is actually pretty close to what's going to happen. I don't see any large bubble, outside of some other black swan event. And so to me, that is a sign that the market's getting a little bit healthier. You've kind of brought inflation down a little bit. Job growth and GDP was always going to slow down a little bit, right? So when you're talking to home buyers that may be estimating, rates are going to come down even more throughout 2025, why wouldn't I wait to buy for another year? Whatever. How are you, handling that? And what's your, kind of outlook on that as an option?
It's one of those, what I tell people in buying and versus waiting, it's kind of, I talk about this in videos all the time. I say, if you got to buy when it's the right time in your life, right? There's no perfect time to buy a house. I mean, it can end up looking back on it, making the decision like, hey, that was the perfect time, right? When I bought back, one of my houses in 2012, that was the perfect time to buy. Did I know it at the time? I didn't. It was just the right time in my life. I was having my first kid, just got married, like all of these things. And so I think that's the perspective people need to think of. It's like, where are you now? Do you have financial stability? Do you have, job stability? Are you going to be in an area for a longer period of time? I think if you're buying right now with the idea that, hey, in 2 years, because my cousin bought in 21 and he was able to sell his house in 23 and take that equity and buy a larger house. If that's your plan, it's probably not the best time to buy a house, right? Because I don't think you're going to see that appreciation. And with transaction costs on buying and selling, it's hard to say what'll happen. But if you have 7-10 years time horizon, I think you should buy sooner than later. I mean, the idea that you can fix your housing cost, taxes and insurance are two gambles out there to some regard, which historically haven't been the issue that they are now. But the sooner in your life you can fix your housing costs relative to where you are in your job, right? Over time, you're going to continue to make more money. In theory, you should be making more money over time. So, which means that the housing piece of your budget becomes less and less the earlier that you fix that cost. And if you fix it now and rates go down, guess what? You refinance, you take that cost down, assuming you can qualify. Or you could wait. I mean, it could go the other way, right? Where rates go up and you didn't buy and now you're still waiting for them to come back down. So it's very salesy to tell somebody, hey, you should do it now because you get the benefit of either having this payment now or a potentially lower payment, or by waiting, you have the potential of it staying the same or going higher. Yeah. It looks very like, oh, well, you just want me to buy. And I think that's the problem with any sort of commission-based job is that it's pushy to do it. But I think people just need to look at your grandparents, look at your parents, look when they bought their homes, look at how much they paid for it, look at what it's worth today. Yep. Was it magic? No, it wasn't. It was time. Time allowed all of those things to happen. Now, There were some circumstances during the pandemic, lower rates and other craziness that added to, fuel to the fire. But I think that's the perspective that people need to understand. I'm very like non-salesy in general when it comes to anything real estate. It's like, hey, if you don't think it's the right decision, I'm not going to sit here and try to convince you. Like, I want to work with people that know what they want to do, that have already made the decision that this is what I'm going to do. It's just a matter of finding the right house, the right opportunity, the right whatever. If I'm here to convince you, then I'm probably not the best fit as an agent. And so, I don't have a lot of those deep conversations with people. Most of my business is still relational. I get some business from online because of that presence on YouTube and stuff. And a lot of those people come to me already knowing my perspective. They know my train of thought on this stuff. So we don't even get into that. It's, hey, I'm doing this because of this. And so, where I am. And so I don't know that I answered your question directly, but it's, No,
I mean, I think that's great. I mean, I think that, the change in the commission agreement too, in the real estate market with real estate professionals, it really separated like the high value agents from the people that were just trying to be salesy and we're just trying to, get paid, which is why most of them are, baristas now and not in the real estate market. I think that it really puts the focus on, a service and a people first business of like, hey, I don't really care if you buy now or not. I'm going to help you out with this. And I'm going to try to provide you with, some guidance and what my experience would lead me to tell you to do. But at the end of the day, you got to do it for yourself. Right. And especially when it comes to a primary home, that's such an emotional purchase. And in fact, I don't even think you should look at it as like a investment. I think it's a store of value. But really what it provides you in terms of like lifestyle, letting your wife and your kids, nest there and create memories together and like create a community around you is going to be so much more valuable than whether your interest rate was at 6% or 6.25% when you purchased it. Who cares?
No, absolutely. Agreed. Yeah. And I think it's, I purchased another home in November, right? When rates were at 7+%. So it's easy for me to say, hey, listen, I'm not just telling you this. I just did it. I had a 2 and a 2.9% 30-year fixed. I decided to go buy another property at 7% with property taxes 3 to 4 times what my original house was. Why? Because it was the right time in my life. Again, my boys are getting bigger. We need more space. We need, there were all of these things that lined up. And did I want to do that? No, I didn't want to do that. But the reality was, if I waited, I knew one of two things was going to happen. Either the price of that property was going to go up or rates were going to go up. And for me, it was, hey, take advantage of it now. And since then, I've refinanced twice. In fact, I closed the second one yesterday. So I took that rate from a 7 to a 6.5 to a 6. I could have waited until they got to 6, but that home's gone up probably another $80,000 since November. So, you got to do the math and you can't always, the numbers don't always make sense in some of these decisions. Some of it, I tell people all the time, one of my mentors says people buy emotionally and justify logically, right? So I try to tell people, do it with logic. Sometimes you got to have a little bit of emotion in there in making some of these decisions and then look back on it and go, yeah, that was that worked out. I was supposed to do that.
Yeah. So you mentioned your mentor. Mm-hmm. Is that somebody that was influential in getting you involved in real estate, or had you already decided to get into real estate and then they became an asset for you?
Yeah. So I use the word mentor loosely in the sense that I have a lot of mentors, a lot of people that I follow online, that I go to seminars, that I watch, on YouTube or whatever. I mean, these people that I kind of follow to some degree, and I know their methods and what they think. And so they've become mentors for me, whether they know it or not. The mentor that I'm talking about here is Brian Buffini. So Brian's a, nationwide real estate trainer, very relational. It's helped me and my business become more relational and helping people understand why I do business the way I do. So yeah. And Brian, whether he knows me or not, I don't know. We've crossed paths many times, but it's one of those things that I have a lot of mentors because, it's better to find somebody that's done it and than try to repeat it and do it yourself.
I love that. So if you could summarize like some of the biggest impacts that he's had, I mean, you mentioned, kind of the shift, and even just talking to you, I can tell you're somebody that, is really focused on, the people in the transaction, not the transaction itself. So was that something you always had, or like, what were the takeaways from this guy?
I mean, I think more of understanding the business. So I'm very pragmatic. So I'm not aesthetic. I don't show a lot of emotion in the sense of anything. Not because I'm hiding it, just not who I am. I've become aware of that. And so it helping me understand that the real estate deal is not, it's not just a transaction to the person on the other side. To me, the way I've done business, the way I do things, I'm being a numbers guy. I'm very just transactional by nature. So I have to make myself aware that, it's relational. It's not transactional, right? That separates a lot of people if you can dig a little bit deeper. So he's helped me just in general, just become more relational. And that's helped me in, all my relationships, family, my wife, kids, and obviously there are still issues and communication and things that happen all the time, but it's like,
it's a marriage.
Yeah, absolutely. You go back to the foundations of why you do some of the things you do and why and having these different perspectives, right? I mean, his whole thing is like, these 5 circles that you have goals in. And so I'm very much a business driven person. I never really had goals, family wise or spiritual wise or these other things. And it's kind of helped me take a step back and like, okay, you need all of these pieces kind of working simultaneously together to have somewhat of a balanced life. If you're all in, work, your relationship's going to fall apart. If you're all in your relationships, your work's going to fall apart. If you're all in here, business, personal, then, these things are going to fall apart. So it's kind of like having this piece of each and trying to set goals and maintain these goals in all of these different areas of your life. And I think that's probably the biggest takeaway for me is like, there's more to life than just work. There's more to life than just, your kids. You can have all of these things and still be successful. And so I think that's probably it. I mean, success for me isn't having, the most money. Success to me is having enough money to be able to do relatively what I want and not have to leave, my kids' practice to go show a property or do whatever. It's like, I have priorities in my business and I have priorities in my family and, most of the time they line up, but sometimes they don't. And you got to kind of make that decision. So.
Yeah, it's interesting that you say that. I mean, I think a lot of people struggle with that, especially entrepreneurs, right? Yeah. Is just balance in their life. I mean, I've definitely suffered from that. I didn't start a family until later on in my life and had to, really, I mean, the cornerstone of those like 5 circles is like, really things that I found in the scripture and in the Bible of like, that's all in there too. You got to feed, absolutely. Feed each one of those rings. But is that something that on a daily basis that you like sit down to kind of organize, or is it just always in your head now of like, hey, I need to make deposits in these different areas of my life?
It varies, man. Some days it's very, right on the front, you're thinking about, and other days it's not. I find out when I read more, when I, am giving myself time to think and that sort of thing, it comes a little bit easier versus when I'm in the grind and just dealing with issues and trying to put deals together and having to film videos and just in the day to day, and you just kind of get mixed up and sometimes emotion takes over and you just kind of get off track. And it's, that's why, you continue to have problems, even, when you know what to do. So yeah, no, it's not always easy. But I'm blessed in the sense that I have a very short memory, in the sense that I can move past things quickly, right? Very little, can I get frustrated? Am I impatient? Sure. But give me 3 to 4 minutes and I'll be fine. I mean, that's the kind of person that I am. And so, blessing and a curse at the same time, because, I forget that I had that little thing, like, a couple hours later, it's like the same thing. It's like, oh yeah. I was able to get past that. I should do that again.
I remember I was pissed about something, but I let it go a while ago. So I'm good.
Exactly.
Well, Jeb, man, I really appreciate your time and thank you for doing this. I think that's a great place to end it on. Kind of tell everybody where they can find you and how they can follow you.
Yeah. So, YouTube is probably where I update the most. Just my name at Jeb Smith, JebSmith. You can go to Educated Homebuyer Podcast. That's me and my lender having more in-depth conversations, and you can search that too. But you can find it all. Just put my name in the interwebs, as we said earlier. Google's got all the information. We already said that. So
awesome, man. Thanks. We'll have to do this again. I'm in Southern California a lot, so next time I'm out there, I'll have
for sure, man. You should reach out.
All right, brother. Have a good one. I appreciate it.
All right, buddy. Thanks again. Adios.